Hi everybody, and welcome to today's event where we have the pleasure to present OrderYOYO. To help us through the presentation, we have a full lineup of CEO Jesper Johansen and CFO Jesper Hylleved and Deputy CEO Mathias Thom. So a full lineup. Today we will cover the Q3 trading updates, a few numbers from you guys, still looking very, very strong, good momentum continued in from since the summer of the merger. I can see the second upgrade since that, so I think that's the headline. But let's walk through some of the numbers and the mergers, and I'm sure Jesper, you will do that. As always, you can ask questions in the box down below. Do it through the presentation or do it after. During the presentation, we will be we're switching off the camera, but immediately after the presentation, when we return to the questions, we will be back on the cameras again. So Jesper, I think I will hand the call over to you from here.
Yes, thank you, Michael, and welcome to this Q3 current trading presentation. It is the first time we've decided to present quality data, a concept that we will continue. So from now on, we will present data on a quarterly basis to give as much information about our business as possible. Yeah, Michael, next slide, please. Yeah, just before we get into it, just 10 seconds on this important notice, or I won't say anything. Okay, yes, thank you so much, Michael. So this presentation is very much a number of how our Q3 current trading has played out. Before we go into the numbers, we would like to talk a little bit about our purpose and value proposition and give you an update on the merger status. So let's start there. Michael, next slide. I've said this before, and I'm going to say it again. It's important everybody understands our purpose. We liberate your local independent takeaway restaurant. That's what we do. And in this economic environment, this purpose has never been more important to specific local restaurants out there. Next slide, Michael. And again, why is that? It's because that up to 90% of all orders in your local takeaway restaurant is orders from recurring customers of the restaurant, not a given aggregator. So paying up to 35%, which restaurants are doing, if the order is handled through a portal, especially not in the current economic environment. Next slide, Michael. So with us, basically, a restaurant claim backs their own customers and they save money. That is our value proposition in a nutshell. Now, with that said, how did we do in Q3? Just next slide, Michael. A strong quarter, ARR of 185 million, and numbers that we are proud of. We have had since the merger position in Europe, and we have an extreme focused approach both in terms of markets we go into, customer segments and products. And one could ask, why is it important to be large, to be profitable, and to be focused? And there is a couple of reasons that I think is going to stress here for you guys. First of all, being profitable and being big and being focused means that we can invest in the best product for our core segments. So we can have a market leading position also in terms of product. Number two, being focused and being large means that our path to profitability is clear. This has from day one, both when we did the merger and actually also before, been very focused and very clear for us that we want to have a clear focus on profitability. To be profitable, to be market leader means that we can continuously invest in liberating restaurants. Also in the long run, we need to run a sustainable, profitable business to be able to deliver on our purpose. And we've seen this in Q3. Our size and focus matters. And have actually delivered on increasing market shares. We have seen increasing market shares both compared to other white label providers. I think this has a lot to do with focus. And compared to the overall market trends data, we've also seen increasing market shares as well. So a strong Q3 that we're proud of, and is platforms for further growth. Now over to Matthias, who will just go through a little bit on the merger progression. Yeah, over to you, Matthias.
Thank you, Jesper. So merger is progressing according to our plans, which is super important. The sales and operational synergies are materializing. The growth product especially, been tailor-made now for the German market. On the other side, our point of sale been tailor-made and is ready for sale for the UK, Irish, and Danish market. And the organizations, because these products are also not easy to sell, and we educated the AppSmart organization to sell growth products. The OrderYOYO organization on the other side been educated to sell the point of sale, and the market growth products are sold to the AppSmart estate, and post now being sold to the OrderYOYO estate, which we are very comfortable at the level the sales is developing, and what we see, it's progressing very fast and faster than we anticipated. On top of that, we also see operational and cost synergies materializing, and we expect more to unfold, having a very positive impact on our business. The success of the merger proves that we have the right strategy and execution, which is a significant part of our path to profitability and a cornerstone. Thank you, and hand over to Jesper Hyvelot. Next slide, please.
Thank you, Matthias. Please let me give you the highlights of our Q3 performance. So, Michael, next slide, please. Was there the Q3? Sorry. Annual recurring revenue September 2022 reached 185 million, growing by 37 million, corresponding to a growth of 25%. So all in all, a very strong growth we saw in Q3 over Q3 21. Next. Our September 2022 1.868 billion DKK, growing by 166 million, corresponding to a growth of 10%. Next slide, please. Now, our Q3 net revenue, 45.1 million, growing by 4.6 million, corresponding to a growth of 10%. Next slide, please. Now, as both Jesper and Matthias alluded to, we have a very clear focus on our path to profitability, and this path has become even more clear as we are now the market leader. This materializes in our Q3 EBITDA, showing a profit of 1.9 million compared to a first half reported EBITDA, showing a loss of 6 million. Next slide, please. Now on our Q3 performance, let's have a closer look at our 2022. Next slide, please, Mike. So all in all, we have experienced strong ARR performance, leading to an increase of our to between 185 to 200. We expect second half from increase of EBITDA guidance to between -5 and 0. GMV and net revenue remains unchanged, and that leads me to next slide, Michael, please. Due to our merger, one slide back, please, Mike. So due to our merger with AppSmart, we will extraordinary our 2023 guidance at our presentation. And this is basically due to it's related to our merger and the performance following the merger and our activities. So next slide, Michael, please. So our guidance on GMV December annualized is between 2.2 and 2.4 billion DKK, a growth corresponding to between 7 and 9%. Guidance shows an ARR, again December annualized, between 215 to 230 million. This corresponds between 15 and 16%. Our guidance on net revenue is between 190 and 205 million, a growth between 31 and 36%. Here it's important to notice that 2021 only contains 6 months of AppSmart activities. Our EBITDA guidance is between 5 and 15 million. By concluding on our 2023 guidance, the presentation is over. Thank you for listening, and now back to you, Jesper.
Yeah, Jesper, and thank you, Matthias. Just concluding our Q3 strong performance that we're happy about. The merger is progressing as planned. We're on a good track to deliver on our 25 strategy, 25,000 restaurants by the end of 2025. That's a presentation, Michael.
Yeah,
so we can open for
we can turn the cameras back on.
Yeah.
Perfect. Just let's start with the first questions. In which market have you seen the biggest growth in the third quarter here? Is it in the German market, is it in the UK market, or is it abroad between the markets?
Let me take that very briefly. I mean we've seen growth in all markets actually. The main growth or the biggest market contributor is the German market actually, which is showing very strong growth. But we do see growth in the other markets.
The next question is, the guidance on earnings is still open for a negative result in Q4. What could change from Q3? If you take your range, it could still be a small negative where you realize 1.9 here in Q3.
Yeah, a good question when you do the math like that. I mean, I think basically the lower part of the guidance is a security for us. I think that we've seen probability in Q3, which we're also expecting Q4, which would obviously lead to more than -5. I can see the math. Somebody's doing good math out there. So in that sense, we need to see a quite adverse market reaction that we haven't seen. So we don't foresee right now anything that would bring us there. But you know, in this market, we need to be cautious.
And to add to Jesper, it also gives room to act on certain integration timing. So if we see the need of Asian cost in Q4, we have the possibility to do so. So we are not getting stopped by a guidance.
Perfect. And then there's a question: have you identified some new potential merger target? It looks like this strategy is really paying off, and you have changed that into to kind of your M&A, your the way you want to drive your strategy. So have you identified any new targets?
On a general, I mean, I won't comment on specific things. So have we identified specific targets? We are looking at a lot of different things, and it's that M&A strategy, an active M&A strategy, is a part of our strategy to grow. I think that the merger that we carried out between Asmart and OrderYOYO has been fruitful and creating. Obviously, that always the bar on how we want to do this. But we are on the looks for targets all the time, and I think it's fair to say that the opportunity in the market has not for the last 3 months. So we're constantly looking, but nothing has materialized to that we need to say anything to the market, and we don't want to comment on specific things. I think that's fair.
Of course. And maybe just to your comments, you know, are they? Do you feel that they maybe look at you and AppSmart and see the possibilities, and that's really giving you a good position when you talk to other? And the other part is, of course, that the market is more difficult, and you know, being bigger is better. So you don't need to say whether you talk to anybody or any specific, but whether you know those maybe arguments is sounding better out if you're speaking to someone.
And
I think
yeah, I think yes, yeah, I totally agree. And adding to that, the successful merger of both of our companies shows us absolutely this is the right strategy. We have the blueprint, and when we having a playbook, which gives us also an advantage in the future, having future acquisitions if we're going to do them.
Yeah, I agree. And the point is right, Michael. I mean, two things happened here. First of all, we, as you know, that we can do this. So obviously we're on the rim, and people kind of think, okay, who could buy like us? Number one. Number two, when you are the largest player, you become the natural consolidator in that position now.
Yeah. Have you seen more or less churn since the merger? As if I recall, you don't give the churn on the Q3, so I don't know whether you want to give kind of insight into it. But is it less churn that is actually driving this better ARR growth, or is it new customer uptake? I don't know whether you can give some small hints of that.
Maybe you can give a little insight into that, Jesper.
Yeah. So without giving any details on the churns, we you can say one of our merger tracks is obviously to look at our estate in the same way across the two organizations. Could naturally lead to either more or less churns. That has nothing to do with our ARR performance. Our ARR performance mainly comes from new RPs and uplift of sales synergies as part of the merger. So that's the main growth contributor we have in the growth.
So we should focus more on the ARR and the GMV than the number of restaurants going forward, maybe.
Definitely, and that's the same way as we look at it. We look at our restaurant as potentials, and we try to revenue up. With that comes our revenue growth.
Perfect. And then, and I don't know where you want to go to those details. You guide to be earning positive in 2023 on the EBITDA level. Is that also cash flow positive?
Well, first half 2023, you should expect the same as you will see in Q4, and that is still within our product. We do to be cash positive within the 1 or 2 years, depending on our investment strategy. But it all goes back to strategy of improving our earnings for the earnings of our restaurant partners. In our forecasting, we do see being cash positive within the near future. Cannot comment on exactly when, but the path on our way to profitability, also ensuring positive cash flows, obviously free cash flows.
And then there's a question here to the 23 guidance. You guide about bigger ARR than gross merchant value growth in 23. Are that new product, or is it price increases that should drive a higher growth in the ARR than the GMV?
Yeah, good question. And I think it's there's a lot to do with product mix here. So new products will drive ARR higher than GMV. Number one. Number two, we do see and that's very important for us to have a dynamic view on pricing. So you could see price adjustments here and there that also drive ARR. But mainly it will be added products.
Perfect. And then it looks like a final question. I guess all companies are getting that. Your big markets, Germany, UK, will probably have a recession, is in a recession. We don't know, looking at the data. How will this affect your business or your outlook? You know, some kind of a feeling then. How resilient are you? That's what we're trying to find out by every companies right now.
Yeah.
So some thoughts about the resilience into a potential recession.
Yeah, good question. And obviously this is something that we are tracking and monitoring all the time ourselves. I think let me just go back to, because we do have some data from the last recession back into 2007 to 9, where we had the financial crisis. And actually what you saw at that point in time in terms of takeaway and the takeaway industry is actually that you did not see a very big decrease, actually the opposite in the number of orders. Basically because that it's not takeaway the 2 pizzas and a Coke that you take away, you take away the dine-in and the restaurant and the vacation and all these kind of things. But this is actually the cheapest cheat you can do for yourself. So what you saw that back then was actually a very resistant, recession-resistant industry. Now, what's different this time is obviously you've put in inflation for the first time in 40 years. So none of us has actually worked in an inflation environment before. I think that there are some views that we already now can see in the data. I think that we can definitely see that the end consumer during the month is consuming differently than he or she did 12 or 18 months ago. So you actually see in week 3 of a month, you see less takeaway orders than you do in the 2 first weeks and the last week. So this is to do with when do you get paid. So that's one thing. So this definitely have some reaction. Now, what you also see is actually that in the inflation environment that you have now, suddenly a lot of the opportunities, a lot of the opportunities is actually getting cheaper than making food yourself, and especially the low end of the market where we are operating. So with an average basket value of around 200 kroner, this is a fairly low price for food. It actually is price competitive compared to do your own cooking and in particular going for restaurants. Obviously, that's well argued. So I think from the end consumer, we expect that although that there is a lot of turmoil going on, that people will still eat takeaway. Now on the restaurant side, what we will see, I think, and we have seen it, and we just need to keep on helping our restaurants doing that, is definitely that there will be a lot of turmoil for those restaurants as well. But in the first half, where we actually saw an extraordinary high churn because people basically had to close. I think that is something that will still go on. But this is actually where we have a value proposition that makes sense for the restaurant, because as I started with, our product is probably more important for a restaurant now than it has ever been, because it's tough out there. Increasing gas prices, which are falling now, obviously, but increasing cost of goods for a restaurant, increasing salaries, all these kind of things. They need to focus on costs, and one of the big cost savers they actually could have is obviously on the delivery part of the business, especially the restaurants that we have that have their own delivery. They shouldn't go through the portals, and we've seen in all countries actually. And I mean, if now we're in Denmark, so people have probably seen all the stuff going on in papers, because there is a trend for the restaurants that needs to go to take back their own customers to make more money. So I think net obviously a riskier scenario, but I think we would not suffer that much from this. Then there is on the whole side of our own business, access to capital and all these kind of things. And that's why the profitability path is so important, right? Because we want to be able to be a master of our own destiny, so we don't need to go out and get extra money and all things. And that's why earnings, profitability, and also cash positive is important for us. We do have a capital base. We were lucky enough to do a capital raising just in the beginning of the year. So we have enough cash and a sufficient capital base to go through our business plan. And especially now where we can see that we are getting closer and closer to cash flow break even. But that's of course very important for us as well.
Perfect. And just to highlight, you saw some very large pressure on the UK market ending last year.
Yeah.
Was that the supply chain crisis more than the economic, that you are more pressured if people can't get people and if can't get goods, if I should see it that, then maybe into a recession. Is that a correct assumption or a little bit too?
Yeah, I think yes. We did see that. So I think that's a correct assumption, combined with the fact that very early on, the weakest of the restaurants, they fell fairly quickly, especially in the UK. So it was a combination of those two, I would say.
Okay, perfect.
Agree?
And then we got one more question in. Only one quarter left, and you still have some of a range on the top line guidance. What are the biggest uncertainties that you still keep some range on the top line guidance, the AR and the revenue guidance, with just one quarter left?
Yeah, so if we start with the ARR, obviously that's only dependent on December performance, and there is still some risk in the market. It's a difficult market on the order side, as Jesper mentioned. So it's difficult to see what's happened two months down the line, and that's the reason for the range within the ARR. On the net revenue side, I would say still some market risk. We do see a little bit of risk on the currency in the British pound. Obviously that would impact our net revenue from our UK market as well. So there we need to see how December performs before we are certain on that numbers. That's why the range is. We're fairly comfortable on our performance, but there are things that can change those two numbers.
That was the question. Thanks to you, Jesper, and thank you, Matthias, for joining in also, and thanks to everybody for listening in. Have a nice day.
Thank you.
Thank you. Thank you all.